yes, I know that Omnovia recently changed up their platform, made it a little bit better and stuff like that. Sometimes I have issues like making sure I hit the buttons correctly, so I just want to make sure everybody can hear me. All right, cool. So, do you also see a big blue eye on the screen? So if you do, just type in EYE. All right. Now, I'm dyslexic, which means, well, it means a bunch of different things. But let me fix. I've got this one little thing that I use. I don't even know how you pronounce it. I don't know if it's Wacom or Wacom, but it's this little tablet that I draw on my presentation. And when I do it, sometimes the mapping sometimes is not set up correctly as soon as you put it on. So I just need to make sure I got it on the right monitor here, and then I'm going to draw on the screen and ask you if you can see that. All right. So if you can, just for make sure that I'm doing everything correctly, what is the answer to this question that makes sure that I'm doing what I'm supposed to be doing? Louder, please. This is about as loud as I can talk. You can turn your speakers up a little bit and it might work for you. But this is about as loud as I can get voice wise. So, all right, cool. Let's get started. So, I'm going to be talking about Ichimoku Cloud. How many of you have seen this presentation before? Just give me a yes if you've seen this presentation before. It's usually the basis of everything that I start with. I usually start there because it'll give me a really good idea of where I should or should not be. Okay. So let's start out with the blanket warning disclaimer. Danger, danger, Will Robinson. You're probably going to lose all of your money trying to learn how to trade. It's just a very counterintuitive process and not the easiest thing in the world to learn how to do. So, and it's almost, you almost have to do the exact opposite of what you think you should do. So it's very counterintuitive. Now, I have to be a little bit more clear with the warning disclaimer because I'm a Series 3 and a Series 30, which doesn't really mean anything other than I took a couple of tests, got 70 or better on them, and I'm now registered by the CFTC and the NFA. And the CFTC just stands for Commodity Futures and Trading Commission, and the NFA stands for National Futures Association. So those are the two government bodies that kind of oversee me to make sure that I don't say anything incorrectly. So you will never hear me say guaranteed. I will always say potential because I can't guarantee you anything. I can't guarantee that you'll go to sleep tonight and you'll wake up alive tomorrow. So, it's just the world that we live in. Now, a lot of people ask me like, why are you registered? I am registered because I hate paying retail fees. I just don't like it. So I've been a professional trader for 23 plus years, and I've been getting the wholesale side of it not that long, probably about 15 years or so. When I started on the professional side of things, so I traded on the retail side for a very long time before I was like, okay, I want to start paying the wholesale commissions. I don't want to pay the retail commissions. So the reason I do that is because we started up our own IB business so that we could clear our own trades. I don't really clear retail. I just clear my own trades and a partners or two. And then I also have seats on the exchanges that I trade on. I either lease them or I buy them. And if you don't know how to do that, we could do a webinar on that in the future. But it makes it so that if you guys are used to paying round turn commissions of $5, it lowers it so that you're paying less than a buck or so. So make sure that you do read CFTC Rule 4.41, hypothetical or simulated results. I'm going to be showing you some hypothetical stuff today. I'm also going to be showing you some simulated stuff. For the most part, I'm going to show you how I really do this in real life. All right. But I am required to make sure that you do not trade with more money than you can afford to lose. All right. So your trading career will probably end up like a bad country song in reverse. Your wife's going to leave you probably for your best friend. Your kids are going to grow up hating you. Your dog's going to die. They're going to repossess your Chevy or Ford pickup truck, and they're going to foreclose on either your single wide or double wide trailer. If you understand the disclaimer that I just read to you, give me a yes in the chat box. That way, if the CFTC or the NFA come by and look and go, well, he tried to scare him to death, he did his job. All right. Okay, let's move on then. Now, my name is Hubert Centers. In the trading and investing niche, I'm kind of known as the no BS approach to trading and investing, and I don't think it's anything that I designed. I think it's just I try to break things down to their simplest core components and figure out so I can use it. And then once I figure out how to do it, if it's useful to me and it helps me make more money than lose money, then I usually share it with other people. So that's kind of how I got branded as the no BS approach to trading and investing. Now, we've already talked about that you're probably not going to make any money trading, right? So be careful. You're probably going to lose a lot of money. And I've seen studies all over the place. I've seen studies of anywhere like there's 2% of us is profitable, there's 5%, and I've seen as high as 25%. So anywhere from 2 to 5% to 20%. And it really depends on whose study you're looking at and who paid for the study. So I will tell you a real quick background on me. I grew up in the hills and the coal mines of eastern Kentucky. I did not grow up with a silver spoon in my mouth. I didn't grow up dirt poor. I grew up in kind of a middle class family. And I only had a few things that I could have done out of the hills of eastern Kentucky. I could have been a factory worker, which I tried that when I was in high school. Did not like it. Could have been a teacher. Teaching, I don't think I would do so well on the teaching side. I mean, as much as I love my kids, I don't think I could deal with other people's kids as well as I could mine. And then you've got a few other things that you could have done, but the risk to reward ratios were really not what I was looking for. I mean, could have been a meth dealer. Could have cooked up a little meth. The risk reward on that trade setup, not great. Could have been a coal miner. I don't really like super confined spaces, and some of those are pretty confined. Could have be a weed dealer, or in the cannabis situation there. Not my deal. Or could have been a moonshiner. None of these right here really appealed to me. So I was like, if I do them, I'm going to try to be the best I can in them. So I was like, how's that going to work? So I would do some future pacing. Go, oh, I'll end up in a room, and my cellmate will be named Bubba with the orange jumpsuit. So I decided not to go down that route. I will tell you, when I left my home when I was 17, and continued on my journey to try to figure out how to be successful and make a lot of money and stuff like that. Which everybody in America, they go, you want to make $1 million, right? Well, $1 million is not what it used to be. Right? I mean, I know it sounds like a lot of money. It's just not. And it sounds weird. And I'm not saying this or showing you any of this collage of pictures to impress you, other than to impress upon you. If a fat redneck from Kentucky can do it, you can probably do it too. Even though the numbers may not support it, I don't know your personal situation. So I've been fortunate enough to go on my journey when I was 17 to try to figure out how other successful, wealthy, and driven individuals grew their income and their wealth. And now I'm in a couple different masterminds where you're just around other successful, driven entrepreneurs and stuff like that, and you figure out how to fix your problems and stuff. And oddly enough, a lot of those guys, like I like interviewing them, saying, "Hey, why are you still doing this?" I've never seen anybody start here at S and end here in E in less than 8 to 12 years, and then they're labeled an overnight success story. All right. I've never seen anybody go in the stair step methodology. It's almost always some kind of real wild, crazy journey, or they have to just grind it out year after year after year. So this is a picture of me and Paula Abdul. She's a super nice lady. This is Sir Richard Branson. A lot of people ask me, how much does it cost to go to Richard's Island? It costs about $40,000 a person, or if you're a couple, it costs $70,000, and that's it. I mean, that's just how that stuff works. So if you want to go, just cut a big check, and Richard will let you stay on the island for a week. This is Mr. Wonderful on his hit show, The Shark Tank. Guy's a little bit evil. Just be careful with him. And then this is Dave Ramsey. You either like Dave Ramsey or you don't like Dave. And Dave and my company do business together. This is at one of his Christmas functions. And this is a picture of me. I actually don't have any of that stuff on right now. I am in front of this microphone right now talking to you, and I am in front of these 24-inch LCD screens, which I know there's going to be some kind of study out, because I'm surrounded by about 20 of these monitors a day. It's either going to be like it's going to create like brain cancer or testicular cancer. I know there's going to be some kind of study out of that sometime in the future, and I just know I'm going to cringe when I hear it. So I don't say any of this to impress you, just to impress upon you is I think you can do it too. There's nothing special about me at all. Like right now, I've got a pair of workout shorts and a fleece on and a hat sitting here talking to you in the Bat Cave. And I affectionately call it the Bat Cave because when I go to work every day, I just go downstairs. I go down the stairs, and there's this little bookcase, all right, where it's a bookcase door that opens up into my office. And it sounds really weird and immature, but when I was a little kid, I watched a lot of Ghost of Mr. Chicken and Scooby-Doo and Batman. I was like, man, I want some of those secret passage doors that lead into secret places in my home. So I like, if I ever quote unquote make it, I'm going to build the big house up on the hill and have these secret bookcase doors leading into my office. And that's how I go to work every day. I walk downstairs, open up the bookcase door, and in this little 1,500 square foot office, me and my team work every day. All right, so congratulations. You're in the right place at the right time, and here's why. I'm going to teach you one of my favorite ways to scan for good trades. All right. Now, it's really good for trends and trend reversals. It's also really good to let you kind of try to stay on the right side of the market. Now, I'm going to say try because most of the time you can look at something and go, that's a long, that's a short. But most of the time, what messes that up, right? It's usually you, right, or me that messes that up. Like, oh, that's a long. Well, you should get long, and then you'll do it, and then it'll adjust and then go on your continued path that you originally thought it was going to go. So, if you're into candlestick charts, this is going to help you a lot. So, first question you're going to ask me is, what does this work on? Now, I'm going to show you a strategy / tactic, and it requires an indicator. I'm not here to sell you the indicator. I want to be crystal clear. I am not here to sell you an indicator. This indicator is on most good platforms. It's not on all of them, but it is on most of them. Okay. Um, I will offer you at the end of this presentation, if you want to upgrade and take your learning further, you can buy a course on how to use this better. But I'm still going to give you a lot of really good information on how to use this, even if you don't buy the course. I'm a big believer in giving first and give a lot first. All right. So what does this work on? It works on stocks. It works on options. It works on futures. It works on Forex. It works on bonds. It works on gold. And it works on a lot of other commodities. Okay. So let's take a look at some of this. Now, you've probably already figured out, if you've never heard or seen me speak before, this is probably going to be a little bit different. I am not your everyday average webinar giver. I am first and foremost a trader and a business person, but I don't really take myself very serious. I don't think that I should have to take myself serious. I do take what I do for a living very serious, but I like to cut up and have fun and joke around. So we're going to have some fun here. So first, let's go through the hypotheticals. This strategy, tactic, or methodology on the S&P 500, on the back testing on the past 5 years, on stocks in the index, is out of 500 stocks on the S&P 500, it worked on 430 of those. So in other words, it didn't work on all the stocks, which you would think, okay, that's kind of weird. But not everything works as well on one thing as it will on the others. But it wasn't too bad. Out of 500, it worked on 430, which is about an 86% success rate there. Now, if you would have taken every signal, whether it's a long and then another long and then a short and a long and then a long and then a short and then a long, well, that would have given you a 33% return. Now, if you'll use this little filter mechanism I'm going to share with you here in just a second, then that's going to increase your rate from 33 to 79% if you remove the counter trend signals and if you wait for a 3-bar confirmation. So here's all this means. If you've got this massive uptrend like this, I don't want you taking these counter trend signals. I want you taking these trend confirmation signals, okay? So we're going to try to stay on the right side of the overall trend. All right. So it's been profitable on 29 currencies over the last 10 years using a daily, hourly, and a 10-minute signal. So I've got a workspace. What I do is I look for a D and then I go dash 60 dash 10. Daily, 60, 10-minute. Now, when you first look at this strategy, it might seem a little confusing if you use all 3 different time frames. So I would start out with 2, either do the daily and the 60-minute or the 60 and the 10-minute, and just figure out which type of trader you are. And it's not that hard to do. So let's talk about time frame selection, okay? Time frame selection is very important. Do you see a slide on your on this PowerPoint that says time frame selection? It's got a lot of little boxes on it. I just want to make sure we're all looking at the same thing here. Just give me some yeses here. All right, cool. All right, so here's what I'm looking at. And I am both a swing trader and a day trader. Now, I do more swing trading than I do day trading because day trading is just harder on the nerves. And you have to be way more right than you are wrong day trading. So I tend to make more money swing trading than I do day trading, but I also like to day trade too. So what I'm looking at here on a daily time frame, when I'm looking at this on a daily time frame, I'm looking for an extension, and I could be in this trade for weeks at a time. Anywhere from 3 to 21 days is my sweet spot when I'm looking at a daily time frame. Now, the cloud is going to extend to the right 1 month, which is either 20 or 30 bars, depending on how you're looking at the trading month, okay? When I'm looking at an hourly chart, the time horizon is going to be days. I should be able to be in this trade for days at a time. And the minimum that the cloud extends to the right is going to be 3 days for me. All right. And then I like to go for a 10-minute, which means I'm going to be in the chart or the trade for an hours of a time. And for me, it's usually a minimum hold of 4 hours. Now, it can be lower than that if I get stopped out. It can also be higher if I turn it into like a crock pot trade. All right, this is what you want. It is the #1 technique used in Japan 7 years in a row. There's been this #1 technical analysis book, and this has been the #1 technical analysis strategy used in Japan. You're going to know exactly what's happening in seconds. It gives you really good trends and signals, and it's designed to produce very good signals. The translation, Ichimoku, means at a glance. So we're going to break down these indicators piece by piece so that you actually see how this works and so you can apply it. And I'm going to spend a lot of time at the end, at least 10 minutes, answering Q&A and doing nothing but live charts on this so we can find some good trades going into next week. Okay, so regardless if you buy the course or not, I don't really care. I'm here to expose you to a good technical analysis strategy that you can use for free even if you don't buy the course. All right. So the edge for you now. So there's a lot of indicators out there that will give you the past prediction, right? Like if this is what happened in the past. Some of them will give you what's happening in the present, right? And then some of them, but not very many of them, will tell you what's going on in the future. All right. So this is the one that will give you the past, present, and the future. So let's go through this. So do you see a big black chart with a blue thing going through it and some price action on the chart? Yeah, Jack, I'll do live charts at the end. All right, so this is what we're looking at. So the first theory that you have to understand with Ichimoku is that little blue ribbon or stream or cloud is considered support, okay? And the main theory you need to understand is if the price action is above the cloud, we want to stay bullish in nature, okay? If the price action goes down below the cloud 1, 2, or 3 days or more, we want to be bearish in nature, all right? So that's where we're going to stay bullish or bearish based upon where the price action is in relation to the cloud. Now, as you can see, the price action will sell off and then go to the cloud and then bounce off of it. It'll bounce off of it. Oh, well, it didn't bounce off great here, and it went below and then it crossed back above. So not great, but it kind of worked out eventually. This is a good signal. Here's a good one. Here's a good one. Here's a good one. So in this PowerPoint presentation, it's saying, okay, we're in a valid uptrend. If it does sell off, the cloud should hold it and it should bounce off and go substantially higher. This blue thing, the first term you need to understand is called the cloud, C-L-O-U-D. All right, that's the cloud. Second piece, the yellow line is going to be called a midpoint average, not a moving point average, but a midpoint average. So this is the cloud, C-L-O-U-D, and this is the future. So this is telling you, hey, if this price action sells off or trades sideways, this is going to be your future support for this thing. And there's not a whole lot of things that do that. All right. Now this yellow line, we call it the turning line. There's a different Japanese term for it, but we're in America, so we're going to speak English. Turning line. So this is going to be a 9-period midpoint average. So that's you got the cloud, and then you've got the turning line. And now we've got 3 things in here. We've got the cloud, C-L-O-U-D. We've got the yellow line, which is the turning line, T-U-R-N. And then this is called the standard line, the S-T-D. And what you're looking at here is if we break the yellow, we're probably going to go to the purple. If we break the yellow and the purple, we're probably going to go to the blue. Now, if we break the blue and we stay down here for more than, say, 3 days, well, then we're probably going to be a reversal, and it's probably going to go substantially lower. Okay? So let's go through one more time. We've got the cloud, C-L-O-U-D. Okay? We've got the turning line, T-U-R-N. We've got the standard line, the S-T-D line. And then we've got the lagging line, L-A-G, which is a lagging component to the indicator. So this is the past, this is now, and this is the future, okay? If we break the yellow, where are we going to go to? Yeah, we're probably going to go to the purple. If we break the purple, where are we going to go to? Probably the blue, okay? So those are your lines. So let's talk about how they're all calculated, okay? You got to be able to see better now, can you, Richard? Quote, unquote, Dick. So in this case scenario, you've got a cloud that goes up here, and this is an old chart of Apple. Don't let that freak you out. We'll do all live charts here in a minute. And then you see where the cloud shifted from red and has stayed red. So on this thing, the thing that's closest to the price action is this red line is going to be the turning line. And the turning line is a midpoint calculation where you're going to take the high and the low of the last 9 days and you're going to divide that by 2. Okay, so here's how that works. You take today, you count back 9 days, 9, 8, 7, 6, 5, 4, 3, 2, 1. You find the low, you find the high, you take the high and the low, so 465.75, you add that to 434.39. Down here's your cheater math, right here. So you take the high and the low, you add them together, you divide them by 2, that's going to be 450.07. Now, most good charting platforms are going to put that on the chart for you. You're not going to have to calculate that out ever. It's just going to be there. Now, based upon what we've already learned already, the price action is below the cloud, and we went from below the cloud into the cloud that we know is overhead resistance. If we break this this red line here at 450.07, where are we going to after that? If we wanted to get short, if we broke this 450.07, where are we probably going to next? We're probably going to go right here next, right? The bottom of the cloud, right? And then if we break the bottom of the cloud, next place we'll probably go to is probably down here, right here, to the green line. If we break the bottom of the cloud, then we'll be going to 425.42. All right, standard line, midpoint of the high and the low of the last 26 sessions. You're going to take the high and the low of the last 26 sessions. You're going to divide that by 2. That number is going to be your midpoint, and that's what you're looking for. So this is the turning line, TURN. This is the standard line, the STD. It's the one that's the second closest to the price action. So in this example, we're going to take today, we're going to count back 26 bars. We're going to look for the low. We're going to look for the high. We're going to add those two suckers together. We're going to divide that by 2. That's going to give us 425.42. The software will do it for you. I know some people just like to know how it's calculated. For me, it's not that important. As long as the software is doing it, I don't really care. Once again, we came from below the cloud. We went into the cloud. We know this is overhead resistance. We want to short this. If it breaks this 450.07, we're going to short that with our first target, T1, being the bottom of the cloud. Bottom of the cloud gets taken out. Then our next target, T2, will be that 425.42. And then if this gets broken, well, we'll be looking to take out these most recent lows. All right, cloud span A. Midpoint of the turning line and the standard line shifted 26 bars forward. So in this case, what we're doing is we're taking, all right, here's the turning line. Here's the standard line. We're going to take the midpoint. We're going to shift it in the future 26 bars. Same thing here. We've got the turning line, you got the standard line, midpoint, shift it in the future, 26 bars. That's going to give you cloud span A. Cloud span B is a little bit different. You're going to take the midpoint of the high and the low of the last 52, and you're going to shift it on the chart. So here's how that looks. You're going to take today's price action. You're going to take 52 weeks back, 52 week bars, 52-week day bars. And then you're going to look at the midpoint and shift it in the future 26 bars. So that's going to give you cloud span B. All right. Lagging line is always lagging in nature. All right. So lagging line is exactly what it says. It's lagging. The price line close shifted in the past 26 bars. So in this case situation, you can see the blue line is the lagging line. And here's how you calculate this. Here is today's price action. And you're going to shift the price action back in the past 26 bars, okay? All right, now, those are the basic components of Ichimoku, the indicator. So now let's talk about some signals, and then we're going to spend some time going through the market and figuring out what trades, what side of the market we should be on. We'll scan for the market, and I'll show you some of my favorite trades that I like to trade with this strategy, okay? So the lagging line crossing the cloud is the slowest but the strongest signal you can take. The price crossing the cloud is a good signal, okay? is a good signal of trend change. It's a little bit slower, but it's kind of like the Goldilocks. This is my favorite signal when the price crosses the cloud. Price and lagging line touch the cloud. Those are usually counter trend signals. The cloud spans crossing when they go from red to green or green to blue. The turning line crossing the standard line. Okay. And then what we're talking about is, let's take a look at some signals here. All right. So I'll slow down. It sounds like I'm talking too fast when I'm clicking the mouse. So I'll slow down a little bit for you. Does everyone see this blue line cross the cloud? So we had this major, massive uptrend here, and then the lagging line crossed below the blue cloud. That is the best signal you can take. It's also very slow in nature, okay? So I don't like that one, but I'll let that confirm my second signal. So on this signal, you'd go short when the blue line crossed the cloud, and you'd stay short until this blue line crossed back above the cloud. Now remember, the definition of this thing is that it shifts back 26 bars, right? So what you'd have to do is from here, 26 bars, you'd actually be short in this area. Look at all this price action that you would have missed out on, okay? Now, you're never going to get the dead high, and you're never going to get the dead low, so quit thinking you are, because it's really hard to do. I've been trading for 23 plus years, and I've got close to it maybe 2 or 3 times, and I could count on one hand how many times I've got close to it, right? And I don't think I've ever got the dead high or dead low unless it's just an accident. So here's the best signal that I like to trade on this system is when the price action crosses below the cloud 1, 2, or 3 bars below the cloud. I think that is the best kind of like Goldilocks trade that you can have. So in this case, in the situation, we would short it here, and then we would stay short until we had 1, 2, or 3 bars above the cloud. Also, once again, you don't get the dead high or the dead low, but you do get a lot of the meat in the middle, right? Like you didn't get in the dead high here. You didn't get in the dead low here. Basically, what you're going to do is you're going to miss the first 25%, the last 25%, but you're going to get the meat in the middle, which is what you can make a really good living on. All right, let's cover the rest of these. Price line and the lagging line. So we've got a major downtrend because we are below the cloud here. And then you can see the lagging line touch the cloud, the price action touch the cloud here and here. Those would be short signals in the major direction of the overall daily downtrend. And then here is a faster signal, but it's going to give you a lot of looks. And the faster the signal, the more signals something gives you, the more false positives you're going to have, right? So in this case scenario, you have the red and the green crossing, which is a sell signal. I would not take that. What I would do is I'd wait until I got back below the cloud here. And then if you did Chris once and then cross back, I would short that. Okay. Chris once, cross back, short that. Now, only reason I would take this is if I shorted that with the anticipation of it going to the cloud, and then I would short that, and then I would cover here on the anticipation of it bouncing higher if you're going to do a counter trend trade setup. All right. Bullish signals. The price above the cloud is bullish if it comes from the high side. Price in the cloud are bullish if they come from the bullish side. The lagging line crossing the cloud is the main signal of trend change. Price crossing the cloud is an earlier but less reliable warning of trend change. Price and lagging line often will find support at the cloud's edges, and the cloud span crossing may be a sign that the trend is changing. Be on the lookout for thick clouds after a run up, which could mean that the trend is about to change. All righty. I am going to take a quick drink of water here. I'm going to let you read the bearish signals, and I'm going to come back here and we're going to start scanning the markets for some trades. All right, so the bearish signals are the exact opposite of the bullish signals. Same exact systematic approach, though. All right. So let's go to TradeStation here, and I'm going to show you how I scan for these in TradeStation. And then if you don't have TradeStation, and if you've got some other platform, it's not a big deal. I'll show you a way to get around that stuff. All right. It also works really good with TOS too. TOS has a built-in scanner for it. Remember, we're going to be looking for daily, hourly, and 10-minute time symbols, all right? So let me disregard this. Do you now see TradeStation on my screen? Because what I'm going to do is, first, what I'm going to do is I'm going to go through the overall market and see where we're at right now. Now, I'm going to try to do it on a daily because I don't have enough time to explain the 60 and the 10-minute, how you kind of use those together. Okay, so let's go to the @ES, which is the big S&P. All right. So in this case scenario, are we, in this case, let me just use just the cloud without anything else on it. There we go. Okay, let me remove that. There we go. All right, let's go @ES. There we go. All right. Are we above the cloud? Yes or no? On this daily chart here on the ES, is this price action above the cloud for at least 3 bars? Yes or no? Check. Yes. Now, you see where this white line is above? The lagging line has confirmed the fact that it is above. It is a decent long. So your job is to get long and ride it to about right here, which is known overhead resistance. Now, you could have went long with 1 bar above the cloud, 2 bars above the cloud, or 3 bars above the cloud. That is a valid setup. So in this case scenario right here, you would have got long on this 3-bar combination, or you can wait for the confirmation. For me, 3 bars there would be decent enough. Now, so the S&P is in bullish mode. It's holding its turning line. Standard line's way down here, so not a big deal. So you could get long at 2037, and your trailing stop loss would be 2000 even. Next target will be 2100. Let's take a look at the Dow @YM. Dow's actually stronger. So you had 1, 2, 3-bar closes above right here. You had a 3-bar combination trade above the cloud. That was a long signal. Confirmation has already been in confirmation for a while, so you'd be coming to this trade a little bit late. And you know you got some overhead resistance right here in this area, right? So we've got some resistance we're going to deal with here in a few days. All right. Jack, there's a setting that you have to do. I think you have to go into settings and make sure that it's calculating the futures rollover in order to make toss ones work correctly. All right, let's take a look at the @NQ. All right, so the NASDAQ here is 1, 2, 3, 4, 5 days above the cloud, right? That's 5 days above the cloud. But you notice where, so this would be, 1 would be aggressive, 2 would be moderate, 3 would be conservative. So this is a conservative setup. But the lagging line has not crossed the cloud. So this is a good trade setup. It's not a great trade setup. It's pretty good, though. So it means the NASDAQ is probably going to run to about 4,600 right here to the overhead resistance. Let's take a look at the Russell. Aha, Russell a little bit stronger here. Russell is 1, 2, it's got at least 3 bars above the cloud, and the lagging line looks like it's going to cross that minor resistance of the cloud right there. So that's a little bit better setup. So for me, what I would do is the Dow looks the strongest, so I would probably focus there. Let's see what else we can find. @GC. So there you go, gold. Whether you believe gold's going higher or not, when it crossed right here above the cloud, your job was to get long some gold, whether you believe it or not, and ride it as long as it continues to be held by the turning line and or the standard line. So in this case, you can see it sold off through the turning line. Standard line held it, and it bounced back above that. So gold looks like it's wanting to go a little bit higher. And it does have some overhead resistance right here at around 1305. So be on the lookout for that. Let's take a look at the bond market @US. All right, so the bond market is in a major uptrend. Let me blow this up so we can see this correctly. It is in a major uptrend. It has pulled back below the turning line, below the standard line, and now it's on the cloud and it's bouncing and it closed back above the yellow. Next place it's going to go is 165, 7/32. Okay. Let's take a look at the 10-year note. 10-year note, look at there, perfect example. Major uptrend, broke the yellow, broke the purple, sold off into the blue. Blue is bouncing. Next target on the 10-year note is going to be 130, 12/32. @FGBL, this is the Euro Bund. Euro Bund is in better shape than ours is. It looks really good. The turning line was broken. The standard line was broken, and now it's back above both. It's probably going to go to 164. Let's take a look at crude oil @CL. So crude oil, look here. You've got 1 bar above the cloud, 2 bars above the cloud, 3 would be a perfect buy signal for us. And the lagging line is following. It's not across the cloud, but it acts like it wants to go there. So crude oil is a decent long now. Okay. Now, when we're looking at this stuff, you're sitting there going, okay, but I don't want to scan through all this stuff on a daily basis. Well, it's not that hard with TradeStation or Toss or any of the good platforms out there. What you can do is you can apply this, and then you see where it says above the cloud or below the cloud. All I do is I just double left click, and it'll filter for me, and it'll say, hey, newly above the cloud, new below the cloud, new above, new below, new above, or new below. And then I can filter through and tell me if something is breaking above or below the cloud. Now, if you don't have a good platform like that, what you can do is you can use something like stock charts. Let me know when you see stock charts on your screen, and I'll walk you through. Toss also has this feature. So when you see stock charts on the screen, just type in stock. All right, all right. So here's how you do this. You go to stockcharts.com, and then you scroll down here to the right hand of the screen. There's these little blue boxes. Does everyone see where it says additional tools? I'm highlighting it right now. Additional tools. And then what we do is we click where it says predefine scan results. Predefine scan results. All right, we click there one time. Then we scroll down. Scroll down. This is going to make you a watch list so that you can play with. And you see where it says candlestick patterns? Well, you're going to go to the bottom here where it says Ichimoku patterns, and you spell Ichimoku Ichimoku. So you could go enter the cloud, which is interesting. That's going to tell you stuff that's just now entering the cloud, and if it enters the cloud, it's either going to go through it or it's going to fail at it, right? Moved above the cloud, I like that. Moved below the cloud. So for time's sake, let's just go moved above and moved below. So I'm going to hold down the control key and I'm going to left click and left click. That's going to give me a couple different tabs, and then it's going to crunch and do its little math, go and spit out a bunch of stuff. It's saying there's 331 equities in all of these exchanges that have moved above the cloud. So I want to filter those by volume. And then I don't really trade stuff on the London Stock Exchange, so I would filter those out too. But what I want to do is I want to trade stuff that has volume. So on this one, HPQ, right? Now, if you don't have a chart that will do this, you can do it on this platform too. Here's Boeing right there. There's Boeing. So let's take Visa. There's Visa. So we're going to click right there on that tab, on that little box right here. And all I did is I've clicked on this little blue box to the left. And then we're going to filter this chart. We're going to fix it. We're going to say we want it to be Ichimoku full. We want to do none of this stuff. We don't need any of this stuff here. So all I'm doing is I'm just clearing off this chart. Then I'm just going to hit update. And then magically, we can see that on Visa, we have a buy signal where it's 1 day above the cloud. Does that make sense? Is everybody following what I'm doing for the most part? All I'm doing is I'm scanning for stuff that has went above or below the cloud. I don't really care which way it's going. Above will be a long, below will be a short. And that's going to make me a short watch list so that I can actually use. Okay? So now, what you do is when you find that stuff, you just add it and say, okay, Visa would be a decent long for me. Okay, let's see what Boeing, because Boeing was on that list too, BA. All right, Boeing, that's an even better long. That looks better than Visa. So we would get long that with a stop of 127.99, and our target would be about 142.50. Now, if you're on the short side of things, it works the exact same way. We're going to sort by volume, and then we're going to look for some Activision. There you go, Activision Bizarre. It's going to be ATVI. I'm just going to go back here, ATVI, and put this one over here, ATVI. Let's see what it comes out with. All right, so it was in the cloud. Overhead resistance work, and now it's back below the cloud, so that is a good short. So that is a good sell signal. You could also do stuff for breaking down. So DPS, let's go DPS, see if that sets up for us. DPS. DPS, more of a sideways. On this one, I would probably stay away from it because it's got too much sideways gyration. So on that one, I would skip. See if we can find any more decent shorts here. Okay, let's see here. Good price action. NASDAQ NYSE. Oh, don't do OTCM, over the counter market stuff like that's pink sheets. You don't need to be doing any of that stuff. Trying to look for another good short. Right now the market's in up mode. NASDAQ. There's Avid. AV. It's a cheaper one, but it might work for you. There's FS, Futures Fuel. Not bad. See if we can get a little bit more higher price one. Charts tend to look a little bit better. NAVG. NAVG. Okay. NAVG. NAVG. There you go. A little bit sideways, but would probably work. So that's how you scan for them. So I want to spend a little bit of time here going through. I know I've got a little bit more time here. Let me get through the rest of my PowerPoint, and then what I'll do is, if you guys are cool with it, I will answer all the questions, and I will spend the rest of the time going through charts. Now, I will tell you, these are some that we're in right now, okay? BIG, you can see why we got in BIG here. That looks pretty good. This is a pretty good one, too, PII, all right? If I can type correctly, it helps if you can PII. There you go. So PII is a good-looking long. You see it's got half a dozen or so above the cloud, and the lagging line is there with us. UAL. Okay, UAL breaking above the cloud, taking off, lagging line with us. Looks like it's probably going to go 65, all right? Is this applicable for day trading? Yeah, it's applicable. We use it on a 10-minute time frame for that, so that we can stay on the right side of the daily trend, and then we'll get in based upon either a 5-minute or a 10-minute time frame. All right, so I'm going to switch back over to PowerPoint, and then for the last part, you guys can hammer me with questions, and then I will also go through with stock after stock after stock, like a lightning round thing, okay? All right, so multiple time frame analysis. I use a daily, an hourly, and a 10-minute time frame. It works really good for options. If you're going to do weekly options, I would use an hourly chart. If you're going to do monthly options, I would use a daily chart. That's a really good example of how to use that, because remember when we were looking at the time frame analysis, if you're doing options, right? If you're going to do options, if you're going to do weeklies, let me get to this. If you're going to do weeklies, then you'd want to use an hourly chart, right? Because it's going to be good for 3 days. If you're going to do monthly options, use a daily, because it's going to be good for a month. So that's how I would do that analysis. All right. Best stops to use, I use a parabolic SAR. I also use the bottom of the cloud if I'm long, or the top of the cloud if I am short. Now, the trade setups. We looked at some live charts. I'm going to give you an offer on the course here, and then the rest of the time we're going to do live chart after live chart. The course was awesome. I've taken one bond trade, made over $900. Do you think I'm happy? Just entered the bond trade, shorted again, where I took profits earlier today after you made me greedy for possible further drops. I'm happy dancing. This is the first time I've had a successful trade during a course. I have the hardest head in the world. You couldn't have made it simpler, Mary. Thanks. You are likely the only reason I have kept at it with trading. Now that I'm profitable, I can't thank you enough. It was really great, and I can't wait to attend your gold trading class. Thank you, Greg. Here's one from Ron. Webinar series was a great experience, very informative, educational, lots of fun. But that's no surprise. All your courses are good opportunities and great values. So I am inviting you to be one of our potential other success stories. And I'm inviting you to join us. So let's talk about who this is for. If you're serious about making real money in the markets, if you are looking for a proven system, if you can follow a simple set of rules and directions, if you know that your success is tied to you taking action and not me actually doing the trades for you, who is this not for? If you are a holy grail seeker, in other words, if you think you're going to take a $5,000 account and you suffer from hopium and you believe that that $5,000 account is going to turn into $2 million by this May, that's probably a little bit of an unrealistic expectation, to say the least, right? And if you suffer from guru-itis, if you follow me and Fausto and Todd and the Chakins and 9,000 other guys online, my advice would be say, hey, pick 1 to 3 of us, try to figure everything out that we're doing, steal our stuff, what makes sense to you and works for you, keep, And what does not make sense to you and does not work for you, just kill it. Just don't use it, right? That's the best way to kind of make your own little recipe. If you can't make a decision, if you like to make things more complicated for no good reason, obviously it's not for you. So there's three types of people. Oh, thanks, Richard. I appreciate that. There are those that make things happen. There are those that watch things happen, and there are those that ask what just happened. Hopefully, you're in the top two groups there. So here's a fraction of what you'll learn. It is the #1 best-selling Ichimoku course on the market today. I'm going to give you 7 proven setups with trading rules and indicator settings, checklist with cheat sheets, with entries and exits, with stop losses and targets, how to scan the markets with Ichimoku, how to filter out the best trades, how to never guess about what you're going to do next, and how to avoid the head fakes. All right? So that's what I'm going to teach you in the course. You have 0 risk, 100% satisfaction, no questions asked guarantees. If you don't love it, I don't want to keep your money. Life is too short, and I don't need the bad karma, to tell you the truth. I always over deliver, period. My goal is that you receive a 10x value return on your investment. Okay. So if you're interested in purchasing the course, you go to hubertcenters.com/cloudy, hubertcenters.com/cloudy, and that will give you access to the course. I know they just posted it up there, so I appreciate that. So here's what all you get with the course. Ichimoku Cloud Charting Secrets 197, how to use Ichimoku with candlesticks, which is included in the course. I'm going to give you 4 follow-up webinars, 1 a week for the next 4 weeks, so that you can get all your questions asked and answered. And then 1 day of live trading, a value of $488. Your special offer today is $97 if you go to hubertcenters.com/cloudy. So there's where you want to go. Now, what I'm going to do is I'm going to spend the rest of the time. I got about 7 minutes, but I'm pretty fast on nothing but questions. Now, I do see that there's some people that have already done this. If you guys have taken the course, good, bad, or indifferent, and I don't really, whatever you want to say about it, I'm cool with, because it is what it is, right? It's either good or bad. I mean, you can't really sugarcoat this stuff. Deadline is for the first 50 people. I usually have a telephone number, but I've given Michelle and Jared the day off because it's Saturday. That's where you go, hubertcenters.com/cloudy. If you've taken the course before, and if you liked it or if you didn't like it, just let us know real quick, and we'd love to know your feedback. It'll help other people decide whether they think they should take it or not. So this is cheap and good. Thanks. Is this the same you offered a few weeks ago? I mean, it's a really good course. I don't really have to reteach it. I mean, it's already recorded. So if you go to hubertcenters.com/cloudy, you can pick it up. Look like I took it. Yep, probably is, Tom. And if you took it before, you can still have the 4 follow-ups, because we let people retake the thing. So that's perfect. Does it work with Interactive Brokers? I don't know if Interactive Brokers has Ichimoku or not. I know Interactive Brokers is a good clearing firm, but they don't have the best charts in the world. Richard, take it. You will not regret it. Oh, thanks, Richard. Appreciate it. Will it work with MetaTrader? It'll work with MetaTrader as long as MetaTrader has Ichimoku Cloud. And I think MetaTrader has it. NinjaTrader, it definitely works with NinjaTrader. Seth, they have a forum that you go download it from, and you just put it on the charts. Thinkorswim has it built in, Vincent. Yes. S&P, can you make the signal? S&P, you can take the signals using options. Yes, you can take the signals using options. Yes. Isn't UAL at resistance on the chart? Yeah, it is at resistance. But look, it was along back here. 1, 2, 3. It was right here. 3 bars above the cloud was along. Works great on TOS. Yeah, works great on TOS. Can you show how to set it up in TradeStation? Yeah, Lance, I show it in the course, and you just have to have 25 spaces to the right. So you just have to go right-click, Format Window. Under the General tab, spaces to the right has to be set up to 25. And then after that, you just apply the indicator. It's pretty simple. I've taken the course before, just came in. I took it and loved it. Thanks, Stephen. Thank you very much. Opened up my eyes to trends and entries and exits. Thank you. Will we always have access to the recording for review? Aldi, yes. As long as either I'm alive or you're alive, you will have access to it. Is the bond course separate? Yes, the bond course is separate. The bond course is more of a Cadillac product. It's $997. It's a total different creature. Yes. Could I call you if necessary, lagging line adjustments in TOS compared to trade session? Yes. Don't call me today. Call us Monday or Tuesday, or send us an email, support@hubertcenters.com, and we'll help you set that up. Michelle's great help offline. Thank you. Can I come if I took it before? Yeah, you can come again if you've took it before. That's not a problem at all. We'd love to have you again. Yep, and we can help you with the adjustment on the trade session. It's actually just a setting that you have to adjust in TOS, Jack. You go in the settings, and then you go futures, and you tell it to adjust for rollover. Is all you do. It's super, super easy. Yeah, it's pretty easy to do. Yeah, not bad at all. You always have access. Yep. Yep. I really want to join your team, but only if we have a conversation. Fred, I've got your telephone number there. I can call you Monday as soon as I get done with this webinar. I've been out of town. I've been in Cleveland for the past week, so I'm gonna go chill with my family. But I've taken your telephone number down here. There we go. And your name is Fred, and we'll call you next week, Fred. Michelle's easy to talk to. Yep. What time are the classes? So the classes they're already recorded. It's an on-demand class. As soon as you hit the add to cart button, you can immediately start taking the class and learning the material. And then what we do is we meet Tuesday either at 6, 7, or 8 once a week, and we go and we scan through the markets and we try to find some good trades to take is what we do. And a lot of it is you go through the class, and if you have a question, the Tuesdays are set up where I go through the market direction, and then I go through my scans, and then if you've got any questions, like you may get any questions on the thing, and then we handle the questions. So it's laid out really, really effectively. When is the class? When is the next class? Tuesday. Yep. And so you could take it right now, get through the class this weekend, and we could be working together as early as Tuesday. Yep. Correct. All right, so give me some symbols here. I got 5 more minutes before, or I got 3 more minutes before Todd comes in. Actually, 1 clock says 5, 1 clock says 3. Todd's going to be talking about options and how to get your perfect strike. So you guys want to stick around for Todd. Todd Gordon, good friend of mine, really good options trader, really good Fibonacci guy, has his own show on CNBC. GILD. So I'm going to try to go as fast as I can, all right? GILD is a short at 90.27, target $80. At GC. GC is a long with a stop of 1239 and a target of 1300. VRX, and the reason I can do this is because I'm using Ichimoku, is a short at 26.98 and a stop of 48.58 and a target of $10. NVDA, NVIDIA is a long. It's above the cloud, long at 33.81, stop at 32.64. Got a little overhead resistance, but it looks like it's cleared at target 38. AFFX. That is a news-related one. I don't think I would touch that one with a 10-foot pole. It's a long, but it's a long because it's news-related, so be careful. LUV. LUV is it's got 3 bars above the cloud, so it's a long with a stop of 42.29 and a target of $50. AA. AA is a long with a stop of either 966 or 866, depending on your risk profile, and a target of $12. Okay, EPE. EPE is a long with a stop of 452 and a target of $10. God, I can't get to all of them. KORS. KORS is a long with a stop of 53.81 and a target of 65. Let's see. FCX. That's pretty easy. That's a long with a stop of 805 and a target of $14. LINE. LINE is a penny stock. I don't trade penny stocks. Sorry. BERY. Is that all right? Yeah, Barry. A long, but be careful because it's been in a congestion period. Target about $38. WLL is, for me, when it's in the cloud, I don't touch it. So for this one, I would just have to watch for a few days. Above the cloud is a long, below the cloud is a short, in the cloud is a don't touch this for me. CAD. Oh, you mean CAD? You mean at Canadian dollar? The CAD, the loonie, is a long with a stop of 75.88 and a target of 80 even. DNR, do not resuscitate, is a decent long with a stop of 230 and a target of 60. All right, looks like I'm right at my time. I got 2 more minutes. MCD, Todd Gordon is up next. He's going to be teaching you how to pick your perfect strike using Fibonacci's. McDonald's is a good looking long with a stop of 120, target of 135. I am out of here. You guys got my link. HubertCenters.com/cloudy. Stick around for Todd. He is one of the best guys in the industry. If you haven't subscribed to Todd's free YouTube videos, go over to his website, tradinganalysis.com. Really good guy. He's got his own show on CNBC. Super nice guy and a really good trader. All right. Good luck. Hope it helps. And I see you guys on the next one.